Hello and welcome back to the Should You Read series, this episode being Common Stocks and Uncommon Profits with Philip A. Fisher. You might ask, what's in the book? And there's 3 parts to this book. The first part is Common Stocks and Uncommon Profits, where there's 15 points to look at, when to buy, when to sell/hold, dividends, 10 things to avoid, finding growth, and then there's part 2, Conservative Investors Sleep Well, where it talks about production, marketing, and research, low-cost production and financial skill, investment characteristics, and the price of a conservative investment. Part 3 is developing an investment philosophy, and that talks about the origins of philosophy, learning from experience, history versus opportunity, and dividends once again. And lastly, is there an efficient market? We'll start with what I didn't like about Common Stocks and Uncommon Profits, the first of which was some of his points are too brief, and this is especially true later into the book. The book is split into many chapters for the large amount of topics covered, and while it's nice to have a broad array of topics, I do wish the book could have been large, and I understand that a larger book might be intimidating and scare off potential readers, so I understand his want to have all these topics and keep his points brief so that it doesn't become a textbook looking size. The second of which is some of his ideas are recirculated from his other books, and this is irrelevant if this is going to be the only book you read from Philip A. Fisher. However, there were variances from book to book, but the main ideas are all roughly the same. And lastly, for what I didn't like, most pages are only big blocks of text. Some people might find this very off-putting because it's hard to keep track of the line that you're on, or maybe it just looks boring when you have page after page after page being just big, huge blocks of text with little spacing in between. In other investment books, there are often page breaks, more diagrams, bonus information, footnotes, and so on. However, for the majority of the pages in this book, it's just only text on the page. Next, we'll go into what I liked about Common Stocks and Uncommon Profits. The first is his general strength and weaknesses points. This is similar to what Peter Lynch had in One Up on Wall Street. He gives 15 appealing things to look for in businesses and 10 things to avoid. The second of which is his philosophy section. This is why I was so disappointed that some of his points were so short. It's because I really liked it. I think it's not all about the numbers when investing. Having a solid mindset is also important, and that's oftentimes not discussed in investing books. And number 3, his emphasis on buying below intrinsic value. Similar to Ben Graham's point, buying low has 2 main benefits for investors. Number 1 is you can get larger gains when the prices increase. And number 2, you limit losses by not purchasing expensive assets. In my opinion, the best chapters for the top 3 in this book would be number 1, part 2, which includes chapters 4 to 6, where it's all the same topic, so I kind of lump them together. The price of a conservative investment. Number 2 is part 3, chapter 2, learning from experience. And number 3 would be part 1, chapter 3, what to buy. So for the third best chapter, part 1, chapter 3, what to buy, the main idea of that chapter is he gives 15 points to look at when examining a business. Points that he considers important to a growing and well-positioned company that will give you great returns. For example, let's look at point 6. What is the company doing to maintain or improve profit margins? Now, this seems like a very basic question to most people, but for newer investors, focused on answering important questions can be very good because it helps to keep them from getting distracted by information overload. For the second best chapter, I would say it'd be part 3, chapter 2, learning from experience, where the main idea is to recognize your mistakes and biases. Seek contrary opinions to dispute your ideas. This is something that I feel is pretty important. It helps to make more informed choices, and there might be something that you missed. For example, maybe you were just only looking at the positive sides of the company when you were doing your research and you thought, man, this thing is really incredible, it's probably going to be the best thing ever. But then you talk to somebody who gives you a contrary opinion and you find out, wow, there was a lot of things that I missed. Maybe the debt situation was really bad. Maybe their market share was continually shrinking. Maybe their management decisions made that net profit margins were going down year after year. And that's something that was causing a negative opinion on this stock that you didn't see otherwise. For the number one best chapter, however, I would say it'd be part 2, chapters 4 to 6, the price of a conservative investment. Where the main idea is the current appraisal, the price ratios of a stock can drastically change your returns, whether it's the price to sales, PE, price to free cash flow, and so on. Stocks that are currently out of favor but will continue to maintain excellent earnings growth will assist in 2 ways. Number 1, the price multiple may normalize, which would give you some returns. If they just maintain their earnings and eventually people seek to that stock being more favorable and give them higher multiples, that alone with the higher multiple could give you better returns. Or number 2, the earnings growth, which will naturally drive your returns if it's the same multiple, even if it's already low. So should you read Common Stocks and Uncommon Profits? The people who this book is definitely for. It's people who are looking for opinions on what's most important when looking at companies. Focus on the key factors like margins and business advantages. Most likely anyone under 3 years experience investing while picking their own stocks. And avoid getting distracted by the noise. I know there's a lot of information overload, especially with the internet, or whether you're looking at the news, on social media websites, and so on. It's really nice to have a list of what is actually important, what's worth focusing on, and what's what everybody else who is a big name investor is usually looking at first before looking at contrary opinions or popular opinions from these websites or news stations. Now, this is for the people who this book is definitely not for. The first of which is the options, day trading, technical analysis, or index investors. For the options, day trading, technical analysis, and all that stuff, it's not really talking about like how the market's going to be different from 6 months from now, or maybe 3 months or a week or whatever. This is really talking about what's the general business advantages that will give them long-term prospect advantages, and to the idea that you're going to know what's going to happen a month from now from looking at that information. That's really not going to make much of an impact on whether you're going to think it's a good company or not. This is something that you're going to see if it's going to have a business moat, if it has a way to expand its margins, to have more favorable positions later on, and where even companies that aren't really loved right now that have low multiples can expand their multiples later on into the future, which that alone can give you returns. And the second of which is anybody looking for really deep dives on financial statements. This was mostly talking about what I mentioned previously, where you're seeing about what has long-term prospects, how they're going to increase their profit margins, and how they're going to develop the business further on. This isn't really talking about what a struggling company is really looking like when you see their balance sheet, or when you're seeing their income statement, what's a troubling statements that you could see. This is mostly just talking about generally what is a good business, what is a bad business, what are some things to look for. And in that manner, it's similar to Peter Lynch's books like One Up on Wall Street. It gives info on the general business advantages, but not really financial statements in depth. So if you're interested in reading Common Stocks and Uncommon Profits, I have links which can get you this book in the description down below. So thank you all so much for watching. If you enjoyed the episode, hitting the like button would be greatly appreciated. And if you're new here, hit the subscribe button and bell to get more notifications on reviews I'll be doing in the future, snippets of information from books that I'll be doing in the future that can help you out. Thank you so much for watching once again, and I hope to see you in the next episode.